Right now, I think the common sense is that Bitcoin is more a store of value actually against the inflationary monetary system we have. Because you see, the influence of the US dollar is getting less and less. I think it's 61% of the world is now using the USD. It's getting less and less in the last couple of years. And I guess I think China or Russia, they will look for an alternative. There were some rumors a couple of years ago, because China bought a lot of gold, that there will be a gold-backed monetary system in the future from Asia, from China, from Russia, and so on. So what's your take on this? You think the next monetary system will be backed again with perhaps precious metals or gold?
Well, it could be. I'm not saying it will be, but it could be. But people say things like that, and I say, well, have you done the math? Because seriously, because the objection to a gold standard, I hear it all the time, because I do talk and write about gold, is people say, well, maybe, but there's not enough gold in the world to support trade and commerce. Maybe once upon a time there was, but when you look at all the leverage and bonds and payments and bankers' acceptances and all the world of commerce, there's not enough gold to support that. And I say that's nonsense. There's always enough gold. It's just a question of price.
Exactly.
So at $1,900, which is about today's price, or even say $2,000 an ounce, no. But at $15,000 an ounce, there is. That's how I get to $15,000, by the way. I don't predict a gold standard, but I say, well, okay, let's assume, I talked to Paul Volcker about this before he died. Let's assume you want a gold standard. You have to ask yourself, what does the price of gold have to be in order to support the trade and commerce? In other words, what is the implied non-deflationary price of gold? So what I did is I added up, I took M1 as a definition of money supply. You could use other inputs. I took M1 for the US dollar, the euro, European Central Bank, basically, Japan, England, China, and a couple other countries, but that's almost all the currencies in the world. The Australian dollars, it's sound, but it's not a big market. And that number is around $30 trillion. Oh. And then I took, I said, how much gold backing do you need? Well, the Austrians always bang the table. It has to be 100%. Or no, 40% is enough. Historically, 20% gold was enough to support a currency. So let's be conservative and say 40%. Well, 40% of 30 trillion is 12 trillion. How much gold is there? About 33,000 tons. Official gold, not private gold. 33,000 tons. So just, we don't need calculus. You use fifth grade math. If you divide $12 trillion by 33,000 metric tons, it comes out around $15,000 an ounce. So my answer, I'm not predicting a gold standard, but I'm saying if you have a gold standard, the gold has to be about $15,000 an ounce in order to support trade and commerce, given the amount of official gold in the world. Well, that's a good reason to buy gold today. Whether there's a gold standard or not, gold is going to move in that direction, either because there is a gold standard, somebody says, let's do that, or there isn't, and then eventually inflation gets out of control and people run to gold because they've lost confidence in the dollar. So one is sort of ordered and one's messy, but either way, that's where the price of gold has to go. If it doesn't, you'll have the worst depression in history, because you'll have to cut the money supply, but they're obviously not going to do that. And this happened in 1925.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
After World War I, when France and UK and Italy and others were thinking about going back to the gold standard, Winston Churchill was actually Chancellor of the Exchequer, and he felt honor bound or duty bound to go back to the pre-war parity. The problem is they had doubled the money supply to fight World War I. So in that situation, you have two choices. You can either raise the price of gold to have a new parity, or cut the money supply in half and have the old parity. Churchill chose to cut the money supply in half. He later admitted that was the worst mistake of his life, and it put the UK in depression several years before the rest of the world. So if you want to do it, that's a policy choice, but you got to get the price right. And the math is easy, and the answer is $15,000 an ounce. That's true, which it is. Why not buy the gold today? Because at $1,900 an ounce, because that's where it's going.
Yeah. Yeah, but we see in the last couple of years that the trust into our monetary system is getting more and more damaged through the policy of the central banks. And the question is, if the trust completely dissolves,
Right.
will people ever trust a fiat currency again? Or exactly, so we need something backed, and if there will be a gold standard or a backed currency, will countries again start confiscating gold like in the 30s in the US? Is this a danger?
Good luck. The answer is they might, but I don't see that. In 1933, President Roosevelt confiscated all the gold before he raised the price. So it was $20.67 an ounce. Roosevelt raised it to $35, but he confiscated all the gold first. So the government took the profits. It was the ultimate insider trade, if you want to think of it that way. If they tried to do that again, I have a feeling that compliance would be very low. I don't advocate, violating any laws, but just as an analyst, as a practical matter, I'm not sure people would be lining up to hand in the gold. But more to the point, if that were going to happen, you would see it coming. In other words, this is why I say people have to be nimble. This is what I do in my book. I tell you what's coming. So you would see it coming. You would see inflation take off. You would see lost confidence. You would see people buying. So there would be ample time. So the price of gold would be going up on its own. You wouldn't need a central bank to tell you what the price of gold is. It would be soaring on its own. So there'll be ample time, if you wanted to sell the gold and take your profits before the government tried to confiscate it. I don't think they will confiscate it. But it's a risk. I would absolutely agree it's a risk. But your answer to the risk is, okay, enjoy the ride and sell it before that time comes. But in other words, unlike 1933, the markets will see it coming and run ahead of the government dictates. And as an investor, you'll have ample opportunity to sell your gold if you want to, or just hold on to it, because I don't think the government can or will confiscate it. They might try, but I don't think it will work.
Okay. What's your take on silver?
Silver is along for the ride. Silver is more difficult to analyze because it is a precious metal, but it's also an industrial input. And so gold is actually not good for anything. It's the best form of money. My view, gold is the best form of money, but it's not good for anything else. People say, what about jewelry? It's just wearable wealth. If you have necklaces and bracelets and all kinds of gold jewelry, it's just gold bullion that you can wear. I don't really think of it differently than a bar of gold or a gold coin. So other than like coating a space helmet or a couple, 5 nines, 99.999% gold, which they use for wire in some applications, which is very, very expensive. Gold's not used for much. Silver is different. Silver is an industrial input. It's used in auto manufacturing and a number of other applications. So you can say, well, silver will go up for all the reasons we just discussed because it'll go along with gold. But then in a depression, it might go down because the industrial demand is lower. So it's a little more complicated. But having said that, there's no way that gold's going to $5,000 an ounce or higher, which it will, and silver is not going to $100 an ounce. So it's a little more complicated, but silver, if gold goes up a lot, silver is going up a lot. It's as simple as that.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.